All right, good morning. This is David from Trader Dale's, and typically each week we go over a specific trade that we did. But today I'm going to do something a little different. I'm going to go over a concept that we used, and it's very similar to it like ICT talks about with his macro times, important times of day, except we're going to look at the market a little differently. Um, we're not going to concern ourselves with macro times. To me, those are really not that important. Okay. Some of them are, right? Maybe around 10 o'clock, and we'll go over it then. But in general, those are really just fabricated type of times for people to trade. But in reality is the market doesn't work that way. Most people who come to the markets every day have a trading window. Some people say, okay, I'm only going to trade the open from 9:30 to 11, or maybe I'll trade from 9:30 to 2, giving myself the midday just in case the morning is choppy. Or there's type people that say, hey, my window's 9:30 to 4. If they have a strategy and they're going to look for their strategy during the time period of that window. But here's the issue, okay? The most successful people who do this have a certain niche of time of day. And the reason why they do those time of day is like you'll say, okay, there are people who make money around the first 10, 15 minutes of the open. There's a reason for that. There's people who make money around the 10 o'clock time. There's people who make money after 10:30. There are people who just make money on continuation trades. You can do all of those, but what you need to understand is that there are different times of day that the market is going to act, and the market is going to act differently and deliver differently and have a different agenda at different times of the days. And these are the things that no one really goes into. So I'm going to give you a brief introduction of it. And obviously, if you want to see this stuff in action, come and contact us and at least get a trial to our accelerator program. And then you can see for yourself how we do everything here. So to break down the day, we're going to break it down into different categories. So I have a chart to the right and I've got this PDF to the left. So let's kind of go over it. So 5 a.m. to 8 a.m. Eastern time is right after the London market kill zone closes and before 8 a.m. This is a time where I'm not trading. We're looking at price action. Obviously, when we get to our charts, we're looking for a higher time frame bias based on what happened overnight. But this is not a time of day we're looking to trade. Okay. Then we're going to go to the no trade zone, which is 8 o'clock a.m. to 9:20. This is the pre-market. This is when the pre-market tends to build up liquidity for 9:30. Okay. Now, the only exceptions that I will have to trade between 8 and 9:20 is that if we have major red folder news. And the only three red folder news that I will trade before 9:30 or 9:20 is those 8:30 numbers, CPI, PPI, and non-farm payrolls. Okay, non-farm payrolls are going to come out every Friday, first Friday of the month, and then CPI and PPI are going to come out the following week, one usually on Tuesday, one on Wednesday. And these are going to be the biggest red folder news of the month. This is where you're going to get major moves at 8:30, and this is where price will dictate and structure will dictate and giving you the availability to trade before that 9:30 open. Okay, but these are the only 3 days that I will do that. Other than that, I consider 8 to 9:20 a no trade zone. Now, from 9:20 to 9:45, we're looking for liquidity grabs. These are opening ranges, okay? Meaning at the beginning of the market, what the market tends to do is it tends to just grab liquidity in different directions from pre-market. So let's kind of give you an idea. So here's the market open right here. So what do? Right pre-market, we create some buy-side liquidity, okay? We also create some more liquidity here, okay? We got some, lows right here, okay? And then we also have a low right here, just to give an example. So in the beginning, in the first 10, 15 minutes of market, what you're going to see is you're going to see the market take out all these internal levels, take out sell side, take out buy side, then go take out this sell side. Now, you could take advantage of this if you know what you're doing. It's a little bit more an advanced trade, but between 9:30 when the market opens and around 9:45, you're going to see a lot of this happen. Big market moves, grabbing intraday liquidity before it gets to the bias that it's going to have for the rest of the day. So between 9:30 and 9:45, we're looking for these type of trades. Okay, now between 9:45 and 10, okay, if you're in a trade, you're just managing it. If you're not, and none of this is set up or you're out of a trade, you're then waiting till 10 o'clock. And what happens at 10 o'clock, okay, right here, is the 10 a.m. AMD phase. It's called the power of three. Okay. And what happens at 10 o'clock is one of two things. We are either going to continue in the direction that we are going, or we're going to reverse. Either one of those two things. Now, that's all going to depend on what the 6 to 10 a.m. candle did. If it's an indecision, we're not sure. If it's a bullish or bearish, then we can look for continuation. Okay. If the move between 9:30 and 10 is against the general bias, then we can expect more of a reversal. If it's in the general trend of where we're looking to attack liquidity or go to, then we're going to look for a continuation model. And we're going to look for an accumulation, manipulation, distribution around that time. So let me give you an example. Yesterday at 10 o'clock, okay, we had a continuation lower possibly happening. Okay. And, the way we trade here is that we use our higher time frames for bias, 4 hour and 1 hour. Then we'll use our lower time frames or middle time frames, like 15-minute for narrative. And then we'll use our 1 minute, 30-second, 2 minute for execution. So as you can see at 10 o'clock here, okay, we accumulated, okay, then we manipulated, and then we distributed lower. Okay, these are the patterns that you're looking for at 10. This is going to tell you what direction price is going to go. And the way we figure that out is after the accumulation, we're looking for an inverse fair value gap to take a trade and take short here into the direction and the continuation of that distribution. Okay, so at 10 o'clock, you're looking for this move either as a reversal for the general move or as a continuation pattern. Okay, now between 10 and 10:30, you're looking for this and you're monitoring this. Now at 10:30, okay, the initial balance is formed. So the initial balance is going to be the high and low of the 9:30 to 10:30 range. Okay. Let's see, make sure this is on here. Okay. And the initial balance is going to be shaded in this color with these red and green lines. Okay. And these red and green lines are going to show the highs and lows. So after the highs and lows are made of the first 9:30, we now have a trade that we can do or not do. And it depends on what price is doing. Okay. There is a 96.4% chance we are going to take out either the high or the low of the initial balance. Those are very good odds. Okay. So with that said, after not 10:30, we are looking for a draw and liquidity trade. We're looking for price to move into the high or the low if it hasn't been taken yet. Now, sometimes the initial balance high or low will be taken pretty quickly. Sometimes it will wait. If it waits and price gets more towards the middle or in the top or the bottom, we call this a draw and liquidity trade, where we look to trade into those initial balance highs or lows. Okay. Now, once we hit initial balance highs or lows, all counter trend trading is off. Meaning once we hit the initial balance high, no more shorts. If we hit the initial balance low, no more longs. Okay. Now, after 11 o'clock, from 11 to 2 is really going to depend on what happened with the initial balance. If price extends above the initial balance, okay, like it did here, or extends below, we are trending and we are continuing to trade through the midday. If price, like here, breaks the initial balance, we are then going to trade a continuation. If price remains inside the initial balance, okay, or fakes out and breaks back in, we are done trading for the day. So on days that we have continuations lower, above or below the initial balance, we are going to look for continuation moves higher or lower. Here, continuation, break below initial balance low, continuation high. Break above high, pull back, continuation high. Okay, here we never broke the initial balance high or low. We stayed in consolidation, no more trading after 11. So this is what we're looking for at 11 to 2. If the initial balance breaks out of the highs or low, we're looking for continuation moves. If it doesn't, then we're done trading for the day. After 2 o'clock, we do not trade. Okay. So by breaking the day down into these categories, we can now show you what price is looking to do and what the agenda is for those specific times. Instead of having one big window, we're talking about these ridiculous macro times at the top of the hour that just don't work. We are giving you a solid schedule for you to be on, for you to understand how the market moves. Okay. So before 9:30, there's no trading unless we have CPI, PPI, or non-farm payrolls, big numbers. Once the market starts, first 10, 15 minutes, we're looking for liquidity grab trades, draws on liquidity. The way we do that is we look for inverse fair value gaps in the opposite direction. We're looking for buy side to be taken, then sell side, or sell side, then buy side. And this is all based on pre-market liquidity. Okay. Once that's done and we get closer to 10 o'clock, we're looking for either a reversal or a continuation. And there we're going to use an AMD formation, an accumulation and manipulation and distribution pattern to tell us exactly what they're going to do with an inverse fair value gap trade as well. Okay. Once 1030 comes, the initial balance is formed. If the initial balance and price accepts price below and above, we will look to trade a continuation model in that direction. If price doesn't break out of the initial balance or breaks out here or fails to displace or extend, then trading's over for the day. Then from 11 to 2 o'clock, you're maybe just watching or not trading, but that's it for the day. So what this does is it gives you a clear, concise schedule of what to look for during the day, what type of trades to look for during the day, what you can expect for delivery, and what you can expect for entries. Remember, every trade needs a bias, a narrative, and an execution. Okay? All right. I hope this helps.
Hey everyone, it's Dale here. I hope you enjoyed the video. If you like to trade alongside me and our team of prop firm funded traders every day, then click the link below the video and hop aboard. We are looking forward to trading with you.